Be not dismayed, for I am your God. I will strengthen you, I will help you, I will uphold you with my righteous right hand. Deuteronomy chapter 31, verse 6. Be strong and courageous. Do not fear or be in dread of them, for it is the Lord your God who goes with you. He will not leave you or forsake you. 2 Corinthians chapter 1, verses 3 to 4. Blessed be the God and Father of our Lord Jesus Christ, the Father of mercies and God of all comfort, who comforts us in all our affliction, so that we may be able to comfort those who are in any affliction with the comfort with which we ourselves are comforted by God. Staff, they comfort me. Matthew chapter 11, verses 28 to 30. Come to me, all who labor and are heavy laden, and I will give you rest. Take my yoke upon you, and learn from me, for I am gentle and lowly in heart, and you will find rest for your souls. For my yoke is easy, and my burden is light. Psalm chapter 119, verse 76. Let your steadfast love comfort me, according to your promise to your servant. Psalm chapter 73, verse 26. My flesh and my heart may fail, but God is the strength of my heart and my portion forever. Psalm chapter 27, verse 1. The Lord is my light and my salvation.
Yo, good morning, everybody. For some reason, my headphone's not working. I don't know. Don't know what's happening. But yeah, hopefully you guys had a good weekend so far. There's a lot to discuss. Let me know in the chat if you could hear me okay. If you could just throw a 1, that'd be great. Yeah, so just for reference, for anyone that may be new, this is basically what these calls on Sundays are. This is all the different topics we're going to cover. So you definitely want to stick around to the end, get all this information. But yeah. So with that being said, yo, what's up, Mike? Yo, could you tell me if you can hear and see everything okay? Been having some issues this morning, getting ready. YouTube always likes to freak me out. Don't know why. I can see here. Okay. Thank you, Mike. Appreciate you. So yeah, again, just keep in mind, Where did it go? This is pretty much what we're going to talk about. We do a full risk on, risk off analysis on Sundays. We look at these assets because these are the important assets to what it is that we do. And yeah, so we spend a good amount of time on all of them. So if you're new, that's what you can expect. This is, part of the reason why we're able to call the market the way that we do, right? And like the accuracy is pretty obvious after you spend some time. But again, this is like the foundation of what it is that we do, how we structure our weekly prep, and what's important to focus on, the impact other assets have across the board. And it's priceless. It's something that a lot of people don't do. They like to focus on, if they're trading currencies, just DXY and the currencies. If they're trading like the indices, they just focus on like the indices or that one indice. And that's just not the right way to do things. All right. So with that being said, first and foremost, we always start with the week of news, right? We try to figure out what it's going to potentially do. We think of power 3. So if we're looking at power 3 for the weekly range, we ideally want to see a Tuesday or Wednesday high or low of the day, or a high or low of the week, right? Many times that's instigated by a news event. There's really no news this week to start the week. And of course, we have a big banger news event being CPI. CPI is characteristically a one-sided news event. Basically, price likes to fly off the handle when it comes to the CPI or FOMC or NFP. But CPI specifically is a one-sided event. FOMC, NFP, those are generally two-stage events, meaning that the first move is generally fake, especially if there's like a 5:30 news. Maybe that's the actual announcement for NFP. And then at 6 or 7, there's another news event, AM Pacific Standard Time. So a lot of times you want to wait. That first initial move that plays out like something like this. This Friday is probably going to have a fake move, right? Maybe not as exaggerated as an NFP announcement would be, but nonetheless, it'll make a move, target some liquidity from the liquidity mapping list. That is here. All these resources are in the free group and in my private group as well for anyone that's new that does want to get a hold of these things and more. But yeah, this is what we look at for liquidity. So, price is only going to target one of 3 things when it comes to bias and narrative. It's going to be attacking some form of a high or a low, like I just showed on that list. It's going to attack. It's going to create, attack, or rebalance an imbalance, right? And then the third option is what we've been seeing on the higher time frame for the indices, or at least the NASDAQ, the last couple of weeks, is consolidation, right? And then from that consolidation, we'll potentially have expansion, right? So it's kind of just the way it is. So if you can answer which one of those 3 things is going to take place, or what seems more likely on a weekly basis, you generally can have bias and narrative for a while. If you move up in time frames and you look at it from the quarterly view, which is what we're going to do in a little bit, it gives you a 3-month time horizon. So you can have bias correct or narrative correct for months, right? And then, of course, bias can change sometimes. The narrative is the overall, where it's headed on that large time frame. The narrative, that's the narrative, and then bias is how it's going to get there, right? It's basically day to day, right? It can fluctuate because there's consolidation, there's retracements, right? There's times when it just doesn't move, and that's all inside of the larger a big picture narrative from that higher time frame. So there is a difference between bias and narrative, right? Which we try to make that point pretty commonly here. So hopefully we're able to achieve that. But yeah, so if we're thinking about the news this week, like I said, CPI is a one-sided event. So on Wednesday, it's going to rip people's heads off. And if you wanted to ever trade these types of events, you got to wait 30 minutes to an hour. Wait for a macro that comes after the news event. So 5:30, 5:50, which is the first pre-session macro, pre-open macro, we classify that as an unreliable macro. Sometimes it does work out, but a lot of times, because it's pre-market open, it's part of the manipulation in the daily range. Okay. So you'd prefer to wait till 6:50, maybe just closer to 6:30, see how that 5:50 macro delivers, see what the other assets are doing at the same time. But again, for the most part, I think that CPI is going to just rip people's heads off. We may not have too much exciting price delivery Sunday to Tuesday. So, we'll kind of see how that goes, right? So we're going to be very light-handed to start the week. Monday, Tuesday, very, very light risk. When there's no news event, it's automatically classified as low probability. That's just the way it is. That's a rule that ICT has given us. And then when there's actual news events, you have the opportunity for price to be low resistance and high probability if you have everything aligned from the process we're going to discuss today, and the process that we do every Tuesday for our live call and every day in my private group. Okay. I just want to remind you guys, don't forget to like the video, subscribe to the channel. Those of you that hop on later, it does definitely help the channel get in front of more people who do need to hear these types of conversations. And it gives a lot of value, so if you feel inclined and do give value, don't forget to like the video and subscribe to the channel. But yeah, so again, towards the latter portions of the week, we should see more volatility. But I'm going to be really cautious of CPI because it's on a Wednesday, it's midweek, and there's no news leading up to that. So that could lead us to a sloppy environment to build liquidity to then be attacked with CPI. CPI and NFP and FOMC, these are the types of news events that can really push that higher time frame. You guys have probably heard me say that the economic calendar is used in a similar way for the higher time frame as a macro is for the lower time frame. It gives institutional sponsorship so they can run to liquidity in the simplest term, right? And because that's the case, and that characteristic is dangerously close to what the macro's purpose is on the lower time frames, you can look at the news events as macro tools for the higher time frame. And then you have the other macros on an hourly basis on the lower time frames, right? And it's engineered to spool to liquidity because of these things. So that's why you want to wait for a news event. That's why you want to wait for a macro, because if you're getting caught in consolidation and then you get wicked out, maybe you're trading before the open as well at 6:30 a.m. Pacific Standard Time. A lot of the time it's going to be the timing in which you're taking your trades and whether you had institutional sponsorship behind you, which again can be anticipated from the macros on the lower time frames. But then, of course, for the higher time frames, we got the news events. Okay. So hopefully that makes sense. Again, if you guys have any questions throughout the call, you can leave them in the comments if you watch the replay, or you can just hit me up, in the chat here on the live call, and we'll take a pause. I'm probably going to get through all the segments, and then we'll have Q&A just so I can get through it in a timely manner. But yeah, your questions will get answered if you do participate in this call, because that's the purpose, right? It's not to hear myself talk, not to build an ego. It's to solely give you value, more value than most. At least I tried to, right? But yeah, so hopefully that's understood. So the first segment we're going to get into is the bonds and yields. So you guys know the significance between the bonds and yields. the bonds has a positive influence or a positive correlation to what the indices are going to do, and a negative or reverse correlation to what the dollar is going to do, right? The bonds also impact the foreign currencies. So, and they also have a pretty solid impact on gold and silver as well, which you could see. Let me pull up the chart. I guess we'll pull it up later. So yeah, if we take a look at the bonds here, by the way, make sure you wrote down what I just talked about. I talk about it every week, but for some reason people still don't write it down. You got to understand the relationships between these assets. Otherwise, you don't understand why we do this, and then if you don't understand the relationship and you're just aimlessly doing analysis on these assets, you're not going to be able to get the value that it provides, the clarity that it provides. So again, the bonds have a positive influence or a positive correlation to the foreign currencies, indices, and commodities, and a reverse to the DXY, and the yields does the opposite. Here's the symbols, by the way, for those that may not know what the symbols are. There's a lot that, when you search up bonds and yields, there's a lot of things that pop up. But these are the symbols for this asset, okay? One thing to keep in mind, too, before we really get moving forward is the fact that we are a week before the quarterly rollover. We're 8 days out. So it's a 15th or 16th of March is when we have that quarterly rollover. So that's another potential reason why we may have even more sloppy price action, because money is now considering the swap over. There's a lot of things happening around these times. So the week before, week of, week after quarterly rollover, if you see that price is consolidated or it's cracked in correlation between all these assets we're going to look at today, or maybe it just doesn't make sense, right? Whatever asset you're looking at, that's most likely going to be part of the reason, not the sole reason, but it could be part of it. There's a lot of stuff going on in the world too. So moments where seasonally there could be a more sloppy environment, may be amplified because of all the geopolitical stuff that's taking place. So, keep that in mind. So that's going to be part of our calculus when we're doing our analysis, okay? Just sets the risk environment. So yeah, if we look at let's go to the monthly chart. Take a glance at that. You notice this wick has been held up. If you looked at this on the 5-minute chart, right, and this is what it looked like, what would you be feeling right now? This is a very important question to ask yourself when you're analyzing the higher time frames, because nothing changes. Whatever you do on that lower time frame, it's going to be the same when you go to those higher time frames, right? It's all the same. It's just different time interval. Wait a minute. Yeah. Okay. And then whatever this does, the yields can do the opposite. Okay. So it looks like price has came off this high. We do got SMT at the highs here. So I would say that, we are inside this bullish order block. But if price can change state of delivery here, that might make us adjust. We might have to then look for the yields or the bonds here to possibly take out this trend line liquidity that was left. Of course, this is a monthly chart, so this is a current monthly candle. Because it's still, we're kind of in the middle 2 weeks. We're in the second, and then of course next week is going to be the third week of March. So we may see, because it's the beginning of the month, and we're coming out that first week. The first week in a monthly range is consolidation and accumulation and manipulation. If you think of Power 3, right? So this could if it is bullish still, end up turning around. And if it was to respect a level like this, and then potentially give a displacement going to the buy side, then that's how we would have to classify this as a, run below the open price, right? Open price was here for the month. Reach down for a discount array just so it can continue to rally, right? So if we see that, then of course, we know where it's going to be going, and we have our outlines up here, the previous week's high. We are in a range, right? It's going sideways like the NASDAQ. Isn't it funny how this has a correlation or a positive correlation to the indices? And if you go look at the NASDAQ, it looks very, very similar in terms of the characteristics. Not exactly the same, but the overall undertone of what the market's doing in this asset will be felt in the assets that are correlated with it, like the currencies and the indices, along with the reverse correlated assets like the DXY, right? So again, what this does is highly influential. That's why we spend time here. A lot of people say, they don't like me spending time here, but guess what? It's part of the process. And you don't have to look at it, but you're going to be missing a key insight that most people are not using, which is why the results you see here on a yearly basis at this point, because we've been public for a whole year plus at this point, you see why there's a difference in what it is that we do and why we're so clear and have so much conviction behind our opinions. It's because of different components like this, understanding the importance of these other things versus, just the importance of the asset that you're trading. Because there's things that influence the indices. Wouldn't you want to know what those are and then what to look for? So then if you have a bullish bias, for example, you're able to then confirm with other confluences that are actual, they're not just like indicators, like they're physically part of the machine we call the market, and they have a direct impact. Everything's interconnected. Okay. So this type of analysis is very important, right? So again, if it changes state of delivery here, and we end up getting price, if we end up getting price to break down through this is a monthly bullish order block too. It's kind of coming back into it. So this could hold price, right? From this monthly view, it could hold price, but we'll have to see how it treats this low of this candle. Because if it gets taken out, again, that's a change in state. And we also have SMT at the highs. So then again, that may set us up to come down and purge out this liquidity. Okay, so we'll keep that in mind as trendline liquidity. So we take that information, that observation. We also have the wick here. Price hit the 25%. Couldn't even make it to the 50%. If this was the 5-minute chart, I would be like, okay, well, the wicks are being respected here. The undertone is clearly still bearish. We took highs, declined. I ran up, took highs again, and then declined. And then prices now, ran up once more, respecting the wicks here, respecting the high. They're still intact, right? So we may still continue to see this asset look to reach for lower prices. So if we take these levels in here, and then we drop down to the weekly chart, we can get a little bit more details. We do have a reclaimed bearish fair value gap here. There is an inversion fair value gap in here. We did take out stops and then reject violently. So regular trading hours for this. Oh, wow. There is. Interesting. I never checked if there was regular trading hours for this. It makes sense though. It's a futures asset. Every futures contract, every futures asset has a regular trading hours feature, right? So again, all the stuff that you do with the NASDAQ and the other assets you trade, it's all universal. Every single thing that we do here on this channel can be used on every asset. I don't even care if it's crypto. We've been analyzing crypto a decent amount recently, and it does the same stuff, right? I don't trade it, but being a day trader opens up a lot of doors for you. You could do other styles too. But again, if we look at these other time frames, let's go to the weekly first. like I said, we have this inversion fair value gap. I think that because it kind of encapsulates that reclaimed fair value gap in here, I think I'm just going to settle in on observing this. So depending on how this holds inside this monthly bullish order block, if we can't break down and change state of delivery here, we already have an early change in state. Then we potentially have an overlapping fair value gap. That's an early sign that this bearish order block here may get targeted. But again, we need to now see if it returns into this. Does it respect the 50%? Because if it does, and then it displaces below this low, that's confirming that this is now a bearish balanced price range. And so then we could look to target the downside as well. If this was the NASDAQ chart, it'd be the same thing, right? These same things apply to every asset. But again, for now, that's what I'd be waiting for. It'd be pretty interesting to see if it can open up, maybe rally up a little bit, right? And then potentially look to do something like this. I think something like this would be pretty cool. If we could get that, make it respect that. Preferably, it doesn't even trade too aggressively back into this. Because again, we got displacement, change in state, displacement, overlapping fair value gap. That's a balanced price range. And then another thing too, if this ends up getting down below this low, can you guys tell me in the chat what that would present us with? Go to low, high, and then it would create a lower low if that was the case. So what does that present us with? Right? Not only a BPR, right? Not only a change in state of delivery here, but you also have the order block on that monthly perspective, bearish. And then you also have, like Fritz just said, a breaker. Okay? So then you can be very confident in the fact that we're going to continue to try to target trendline liquidity. Some of the other lows, right? Close proximity lows, the wick, right? The quadrants of the wicks on this one and the low, this one and the low, this one and the low. All the quadrants give you multiple targets to reach for if it does confirm bearishness by doing something like I've just drew on the chart here. Opening for the week would be amazing. Well, this is a weekly chart, so maybe this takes 2 weeks to do this, but opening up next week, I wouldn't be surprised if we get a beginning rally to get us up to the premium. If it can't even attempt to get up there and it just starts to rip lower, you're even more confident that it's going to go lower, right? But if it gets outside of this is our line in the sand. It would kick us in to potential bullish continuation mode. Okay. So it would kick us into bullish continuation. And then we would be able to target the highs up here. We'd be able to target this high. There's a gap with this candle's open and this candle's close here. So the close right there to that's a little gap in there. It's a new week opening gap, if I'm not mistaken. Something that's very eye-catching is this right here on the 5-year. All of these are correlated. They're the same asset, but they're different time intervals. It's 5-year, 10-year, 30-year. But they're very correlated. And if you could find SMT between these three, that's another thing you like to look for, or that we're taught by ICT to look for. Because if you have SMT, that tells you that something's going to happen in this, maybe reversal. And if it's going to reverse, that's going to have an impact on the indices. So you can imagine if we have like a bearish SMT on this and it was bullish, but it turns bearish, and you have, say, a bullish NASDAQ at the moment, but this SMT is present and we got a displacement like this, you can anticipate that if there's a PD array in the NASDAQ that can promote a downside move while this is happening with bearish SMT, maybe it starts a little sooner. You can use it as a thing that tells you the future or gives you an anticipation of what's to come for the assets that are directly affected by the bonds and yields. right? That's a critical, very powerful gem I just gave you guys on how to use the bonds and yields and why they're significant, aside from just the reverse correlated effect. SMT is a timing tool as well. It's a verification tool for PD arrays. So if you get SMT happening at a particular PD array, many times it's going to be confirming. And then especially if you get it in an asset like this that has a direct link to the behavior that happens in the indices and the foreign currencies, you can see how it could be beneficial, for your anticipation. So if you didn't write that down, I highly suggest that you do. We don't really have that characteristic here at the moment. There's really no SMT. So it's not really applicable at the moment. There's lots of lower highs in there. It did peak. I guess it kind of is an SMT, huh? Right there. You could see that pretty much led to a pretty rapid decline in here. And again, we've changed state of delivery after a stop run with SMT. We've overtaken a fair value gap in here. So the only way that this can be trusted to go higher, or the timing can be trusted to go higher, is if we were to get back above this and not treat this as a bearish balanced price range, which it has the likelihood of doing at the moment. Seasonality as well is going to play a role. So I'm not going to get into it today, but we talked about it last week, I believe. And the seasonal influence doesn't change week to week. So yeah, we always do it at the beginning of the month. So yeah, if this opens up and respects this and declines, preferably that's what I'd like to see. And if that continues to happen, and we don't get back outside this upper portion of the fair value gap here that should act as a BPR range, overlapping fair value gap variation, if that holds in price and we can't get up there, we're going to continue to drop. If it gets up here, we'll go higher. Okay. So that in a nutshell is what I'm anticipating for the bonds. So if we move on to the yields should do the opposite. Okay. So if that's the case, we should see this fair value gap. We should see price trade outside of this fair value gap and not breach the lower portion of this fair value gap here if it's going to be bullish. Just like on the other asset, on the 5-year, how there's an equal low down here that looks pretty nice. We actually have equal highs on 2 of the yields. So we did take out buy stops here slightly, but it's not very significant. We also have equal highs up here as well. We have taken out liquidity down here, so stops have been rated. So if they were to begin their move higher, right, we do got a small fair value gap in here. We got change in state after a stop run. We got a stop run in here, change in state, fair value gap overlap. We got a stop run here, change in state, fair value gap that hasn't quite been fully filled up. So we'll see how that behaves. I wouldn't be surprised if this opens up, declines into this order block, uses that as support, and then looks to explode. If we go to the quarterly perspective, you guys probably see that orange line there. We could see that that's a quarterly bullish order block. We got a failure swing up here. So if this does hold in here, it's been kind of nasty the last, 1, 2, 3, 5 quarters. The yields have been having somewhat of an issue. So we'll see what it wants to do with that. But this 30-year, whatever the 30-year does, the 5 and 10-year are generally going to be dragged, just like with the S&P, how if the S&P does something, it's going to drag the other indices generally because it's heavier weight. You could look at the 30-year on the bonds and the yields in a similar fashion, or at least that's my observation, right? Works very similar. So yeah, that's pretty much what my opinion is for the bonds and yields. And again, if that does take place, that means that the dollar should be able to pick up more momentum to the buy side at some point, unless this fails, or if it has a crack in the correlation overall, which could be something that takes place because there's so much stuff going on there's so much uncertainty in the market, things are a little bit disjointed, right? And things are a bit sporadic, a bit unwilling to really make a move because smart money knows that there is a ton of stuff happening and there's a lot of uncertainty. And that's not good for the market, that in terms of like if it's going to rally or not, and seasonally, we're still in the beginning of the year. So if you think about the yearly power of three, the first quarter to the second quarter, it's generally accumulation and manipulation, and then second and third quarter are generally the expansion. And then the fourth quarter has one more expansion and then caps the yearly range, right? So that's the way that you segment out each quarter and each, I guess, characteristic for the yearly power of three. Obviously, it's a yearly power of three, so all this stuff takes time to do. But I mean, I think it's beneficial. We're able to then call bias and narrative and know what the characteristic is, where we're at in terms of the yearly power of three, how we should behave around those times, because it repeats every year. So it's kind of just the way it is, right? So again, if this is going to go higher, that should pull the DXY higher. And if this is going to go lower, it should pull the indices, foreign currencies, and commodities lower, unless there's a crack in correlation. It's not going to be perfect correlation, but the sentiment should provide evidence of that. Okay? And we'll see. And if something changes, obviously we'll have to make adjustments, but just based on this asset, that's what we see. Okay? Do you guys have any questions? Then we'll move on. Still one in the chat if you don't have any questions. And again, for those that may show up late, we look at the indices and foreign currencies a little bit later. Let's see one. Okay, cool. Fritz. Let's move to the currencies. So if you look at the dollar, we have had a pretty solid interest to want to go higher. We have inverted this fair value gap in here. You notice how we still have been using the quarterly fair value gap from like a year ago, which is way over here. So we're now back above that. I did mention the other day with this wick holding price after a stop run, price going down, respecting the wick, displacement above this candle, creating a change in state of delivery, lack of response from this bearish breaker in here, which you can see here, low, high, lower, low. That has led to price being interested in taking out buy-side liquidity. Now, is it going to continue to do this? I mean, if the yields start to really rally up, the DXY should also be able to continue to keep going higher. What's going to turn our interest back to the downside delivery in the dollar, right? Well, we're going to have to break down. We're going to have to respect this again. This will have to be a massive wick. It's already just a small wick, a decent wick. We're already beyond the 50% of this. Okay. Let me see. Is it specific time frame or times when you watch the bonds? So I keep an eye on the bonds and yields every single week. I peek at them every day just to see, okay, well, it's an extra confirmation even for the lower time frames as well. But if you wanted to just use it for narrative, because sometimes the fact that it's not perfectly correlated maybe throws you off on the lower time frames, you could just simply look at it every week, and then just kind of go from there. And then like the start of the week, midweek, and then at the end of the week, you can get kind of a feel for what impact it has. And there's no real time frame. It just kind of depends on what you're doing, right? What are you looking at it for? Is it for assistance and further confluence for an entry? You're going to have to look on the lower time frames and then couple that with the higher time frame. If it's for bias and narrative overall, you're going to want to use the higher time frame, just like we do with the other assets, the indices, right? So So yeah, again, it does throw people off when it's not perfectly correlated, but it's not said that it's perfectly correlated. It's got an influence. So if the sentiment has an influence of bearishness, it's like in the yields, it's going to impact what the dollar does, right? I got confused trying to look at bonds for session. Yeah, no, you don't do that. You further confirm with the bonds and yields. If say you have a bias that's bullish on the Nasdaq for the session, you just take a glance at it. It's not going to be a be all end all, like as if the narrative or price action on the bonds and yields is going to directly, like 100% of the time, not allow for your asset, like the indices, to deliver, right? It's just a further confluence. What's happening on the Nasdaq and what the DXY is doing is a lot more important real time. But it's kind of, you could just use it as, like in terms of the bonds and yields, you use it as a layered confluence for what you're already looking for in the Nasdaq. But when you start to jump down to those lower time frames, again, because they're not perfectly correlated, it could throw you off. If you already determine that you're going to take a buy and you're in a buy and you just want to see what the bonds and yields are doing, because if they are going together, it's going to be a really nice move most of the time. But if it's like kind of choppy, which the environment we're in right now promotes, that's why when you look at the bonds and yields a little too closely and try to put a little too much emphasis on them, like on the lower time frames, it could really throw you off. So the more important element is what the DXY is doing in comparison to the indices, and of course the currencies as well, because they should follow what the indices are doing, because they both have a reverse correlation to the dollar, right? So again, you could just simply stay on the higher time frame for the bonds and yields, just so you're not tempted to get thrown off, because that's what truly matters, honestly, because you're just trying to map out what the higher time frame perspective is and what supports that higher time frame perspective, so then you can drop down to the lower time frames on the asset you trade and then be effective with it, But that's not uncommon, Fritz, that when you first start learning about the relationship between these different assets, you may get pulled around because of the experience, the experience that's needed to understand, when something's important and when to kind of put it aside. You guys have probably heard me from time to time over the last 2 years. I've said like, okay, well, the bonds and yields are looking kind of nasty, so we're just going to put that to the side and then just go off of the other asset relationships. There's a reason for that, because again, it's not a be all end all. It's one of the largest, strongest confirmations for a trending environment if you could see the bonds and yields agreeing with, say, bullish or bearish price delivery in the asset you're trading. That's what it should do. It should be cleanly following the correlation, right? But if it's not, and it's kind of all over the place, or if the bonds and yields, for example, are not doing anything and they're sideways, that is a situation where you're going to have a problem, right? It's a real interesting situation, right? And that's when you'll find things getting a little bit confusing. I've seen a decoupling between bonds and yields. Yeah. It's because geopolitics, it's expected for it to be that way. Just know that whenever there's a decoupling like that, you just have to move it to the side a little bit, keep your eyes on it, but that's not going to be a determining factor for whether you get into a trade or not. It's just a bias assistant, right? A further bias amplification and a trending environment confirmation as well. Because if the bonds and yields are rapidly going to the buy side, well, if the bonds are going to the buy side and the yields are rapidly declining, and you see that the indices are rapidly going to the buy side, it's a very healthy environment, right? Because they're in line with the correlation. So you can expect that there's going to be very nice moves, lots of low resistance taking place until it hits a PD array, opposed to what the direction is. So yeah, I prefer not to go down to, I wouldn't recommend it early on. The better you get, the more understanding you become with using this style of analysis with that asset, the more you'll see, or the more you'll be able to easily determine whether it's something useful for the time that you're trading, or is this something that you should just put to the side. But if there's a decoupling, if the bonds and yields are consolidated, those types of things are, those are the moments where you got to put it to the side, so yeah. So again, looking at the DXY here, we've taken buy side. It looks like it's giving a retracement of some kind. We do have an accumulation in here. Set the 1 hour perspective. So we do got equal lows down here. I honestly don't want to see it go down there if the yields are going to keep going higher, right? If the yields do go higher, you want to take a snapshot of this right here, because doesn't it look like pretty close to what this looks like down here? Doesn't it look like there's a similarity there, right? Look at this weekly chart and then look at the yields. Doesn't that look pretty similar? Not exactly the same, but sentiment-wise, it looks somewhat similar, And if we can get the yields to expand, and then, with the DXY, if we can get this to hold in this level in here. So what is, I think that's a fair value gap from somewhere. Yeah, I'm not sure what that box was depicting. Must have been doing something, I don't remember. So we actually got this in here to watch. It's a suspension block in here. Okay, so yeah, we'll keep that in mind right there. But yeah, so if this is going to continue to be bullish, we've taken buy side here, so that's external range taken. And what's the next logical thing for us to expect when external range liquidity is swept? It's internal range liquidity. Because if it goes up, breaks liquidity, most of the time they're going to come back down, reach for a discount again before they look to target a premium. What specific discount? Well, a PD array that aligns close to a discount, or in fact deep in a discount, or even just slightly into a discount. Like if you measure this out, we got equilibrium right here. What PD array is in a discount? What PD array is in a discount that you can easily identify in here? Get this markup. Right, so what would you say is the closest thing? Well, got that fair value gap in there, right? So it may want to go down there because it looks like we completed, or because we have completed a market maker buy model in this instance. From this high, we had accumulation, reaccumulation, smart money reversal. We got the first stage distribution, rally. And then we got the second over here. Didn't really have a secondary one. I guess it kind of did it here, but that's part of this first one. And it just rapidly rallied up, targeting the buy side up here, stopping anyone out that was going bearish in this instance. So, if this is, look at that. Look at those equal highs up there. So yeah, if this holds in here, say it respects this this gap in here. Say it can't even really trade into it. Say it stays above this suspension block that we just outlined, which is just a volume imbalance above and a volume imbalance below a displacement candle. This is on the weekly chart. It's a weekly suspension block. The purple colors for the week, by the way. But if we could stay above this, or at least stay above this fair value gap and it does not get broken, we should be able to reliably see this continuing to go higher. And honestly, because we basically have this high here with displacement that traded above it, it's not really rational for us to think that it's going to go all the way down there, especially if we're bullish. It's not what we want to see. We have sell side that was offered and buy side that was offered. If it's bullish, all of this lower portion from, this candle lower should be classified as a balanced price range, assuming that it's going to keep going to the buy side. Okay. So again, what are we going to expect if that's the assumption? Well, we got the bonds and yields promoting that idea, lower bonds, higher yields. We got equal highs up here, right? And it would make sense if this opened up, declined, to tag a discount relative to where price is at currently on this higher time frame, just to set them up to go higher once more. Okay. So that's going to be what I want to see. I want to see if we can get the dollar to, I want to see if we can get the dollar to rally from inside this area. I want to make sure that this gets respected. So until I get the response from this level, until I can see if it, first of all, wants to get down there, and then observe the response from it. Why didn't I fill this whole thing in? Because look, this high to that low, once it broke that, that's a balanced price range. We do have this little gap in here, but if you notice, we have a wick buy side, wick sell side. That's, even though there's not a full body candle, it's still balanced. Because it's a new week opening gap, if it was to fail, it would get referred to again, because that's just the nature of the regular, the new week opening gaps, new day opening gaps, and regular trading hours gaps. But for now, because of what we see, the anticipation, given what the bonds and yields are doing as well, is going to be, I want to see price open up, decline. Is it tradable if we see that that gets confirmed, that it does want to reach down into here? Is that a tradable event in terms of counter trend? Would you classify that as a tradable circumstance? I kind of want to get what your guys' perspective is and how you feel about that. So yeah, let me know in the chat. Can you guys see how that's something that can be reasonable? If you understand all the things that we've just talked about, how external gets taken and then internal range gets taken, right? I mean, you could target the 50%, Fritz, but ideally, if this was something that you were going to trade a counter trend trade off of, because you're coupling it with opposing PD array to the buy delivery, external range was taken, and now we're seeking a fair value gap. If you were to trade that, the closest thing you could trade to is this here, right? The low, this low, and then of course the high of the fair value gap. It will be pretty nice. Well, it'd be pretty nice if it could respond aggressively without tagging that 50%. Because remember, if we're bullish, we want to see levels get respected to their 50% level. Preferably in this case, it's going to stay above the 50% of this wick in here. Okay. That's a 50% of that daily wick right there. So preferably, maybe it opens up, declines, tags this out, but refuses to come down into this. That's a possibility because we got sell side, buy side. This was a market maker buy model. When a market maker buy model is completed, it's a balanced price range. So price should not look to trade aggressively down into it. It shouldn't. That's just the way it is. If you go back test this idea and market maker models, you'll see that this is in fact the case until it looks to turn around and sentiment shifts. Okay. So yeah, that's going to be my opinion on the DXY. I want to see if we can get, possibly the reaction off of this, the respect to the 50% of this wick in here. I want to see if that can lead to bearish delivery. Maybe it just goes lower to then try to go higher again, right? Maybe it does do that. We'll have to just wait and see what the response is going to be from this. We don't chase price. Executing something in something like this is chasing price, right? you want to wait and see. Is it going to respond to this wick in here? Right? If it does open up, maybe, tries to attempt the lows and it doesn't get down there, and we start ripping beyond some of the breaker portion in here, because that's what this is, this red box. It's actually a breaker on the weekly chart. Okay, so this breaker, this high, is an opposing PD array to the run higher. So when price in this bullish run ran up into it and fulfilled it, what happened? It created a counter trend move. So again, I want to see how this is going to continue to behave. If we respect this wick like it is, say it displaces and then breaks down below this low here, and then it gets below the 50% of this fair value gap, that's an early sign that we'll then try to come and take this out, and it may look to drop. And then we'll potentially see that the bonds and yields promote that as well at some point. But for now, the bonds and yields specifically are promoting the fact that this could continue to keep going higher. And all we need to do to verify that is continue to see this type of stuff respected, right? It did respect this, so it's potentially a viable draw on liquidity, this fair value gap. But we have to see how it's going to react inside this. All right, we want liquidity to be swept before it goes, right? Because if we can drop down here, what stops are below here? Stops from last week, right? What kind of stops? Sell stops, or a stop loss for the buy position. So there's liquidity resting there from last week. So if they open up for the next week, this coming week, they open up, purge that liquidity. They've now pulled in traders' liquidity from last week. And if they're going to go bullish because price goes from external to internal, then back to external, then this could be potentially classified as counterparty liquidity for potential continued buy-side delivery. And then what would they do? They'd be looking to take profit above a high like this, or if they get, even more excited, maybe they'll look to try to get even deeper, come up into these levels, these equal highs we mentioned. All right. So again, that's pretty much my perspective on the DXY. Do you guys have any questions? Good morning, Slim. Appreciate y'all hopping on, even though it's early calls that I do on this day, just for the next couple of weeks, and we'll go back to normal schedule. Okay, Fritz said it's all good. Okay, perfect. So that's our opinion on that. We'll look at the currencies here. So we got we called this entire move going lower. For those that do remember, we literally called this perfectly, right? Talked about how this up candle needs to hold. This wick here, if we can get back below it and then stay below it, should be able to hold. This low, high, lower low is a breaker. You see this overlapping wick in here, right? Wick, inside the little new week opening gap area. That may act as a BPR, right? Unless they're going to be disrespected and then try to start going to the buy side, which, we'll have to just wait and see. We have responded below this low. Do we have SMT up there? I guess we kind of had SMT here. But nonetheless, we closed out below the fair value gap. We closed below this wick. Large wicks followed by displacement leave behind balanced price ranges. That's another variation of a balanced price range. For those that don't know, there's many variations. I've given you guys a couple here on this YouTube channel. We talk about even more in my private group because there's many variations of balanced price ranges. And they're a game changer in terms of your understanding of what price should or shouldn't do and why, right? It's unrivaled, so. So yeah, when we take a look at this higher time frame on the currencies, again, we do got this run below this low. We do have to watch this low, high, lower low, right? This down movement. If it can stay below that, then of course we may have the likelihood of trying to dig a little bit deeper. If dollar goes higher, that's what we'll potentially see. If we look at this daily chart, again, we got a lot of gaps in here. It's very gross. price delivery. It's very, very gross. It is going to where we're looking to see it go to. All right, we got a new week opening gap here. Notice how it came back into that. We do have a weekly fair value gap in here, all the way from May of last year. So we did come off this low pretty aggressively. That's not necessarily the greatest sign for us to think that it's going to go lower still. A little bit less in the euro, but again, we'll just have to wait and see what it does. We did take out this liquidity, so external range has been taken. What did price immediately do? Seeked internal range liquidity. Once they took external, they seeked internal. And so now what's the next potential idea? Well, if it's bearish, we have this up movement here. If we move up in time frame, we also have a wick in there. Let me see, do we got an order block there? Yeah, we got an order block right there. So it needs to stay below this order block. If it starts to rip through it, that becomes a problem, and we may have to adjust. The line in the sand is going to be this mid portion here. So we'll keep that in mind. Okay. It's also below a suspension block here. See that? Volume imbalance, displacement. So that it's in the family of gaps, So again, if this is going to be a bearish move, we have buy side, sell side. We have a low, high, breakdown. So the down movement here is a breaker on a larger scale. So we do have this large wick that took place. So we got to see, okay, well, how's it going to respond in here? If it's going to be bearish for the week, my expectation for the weekly range should be potentially for price to open up, maybe look to rally a little bit, but give a wick just to take out previous liquidity from last week. And then, going into Tuesday, maybe it's going to take till CPI to then try to decline and then try to target the sell side. Assuming that's going to be the case, everything can be changed going into CPI. That's the risk with FOMC, CPI, rate cuts, all these different news events. They can reprice and change the sentiment to where they want it to go because it's all controlled. If they want price to go to zero, they could. If they want price to get up to this high up here in one shot, they could. If they want to turn off the downside, they could. Just off those news events. That's why they're so important. But they don't obviously do too crazy things because then it'd be too much risk for big banks and institutions. So there's a limit to their manipulation that they have to keep themselves within. So that type of stuff isn't expected for them to shoot up there. Can they do it? Sure. Have they done it? Yeah, they have. They have done reckless things like that. But it's not something to be fearful of, but it's something to keep in mind. And that's because that's a risk around these news events. We're going to keep our risk low. And again, it's low probability when there's no news. And there's no news up till Wednesday. So what we're going to have to do is observe, obviously, how it's going to start the weekly range, get a feel for what liquidity is there. But again, my assumption, given the analysis that we've done so far with the bonds yields and DXY, is going to be to see if this can open up, rally up a little bit, basically do the opposite of what I want to see here, right? And then look to try to, purge the sell side again, if it's possible, if it allows it. Then we'll throw this in here. There's a little gap in there. I talked about this the other day. I literally, if you go back to some of the calls, like the last 2 weeks, I literally called for this level. If it's going to keep going lower and it breaks this low, we're going to target this, right? If you go back and look at it, look at my opinions on it, we literally called this whole move. And we basically said that if this second change in state of delivery holds price, it's going to keep going lower. And then once it got below this, I talked about this low and the gap in there. Small little gap. And you can see that that's present here. That's the actual inefficiency. You could map the whole thing, but what's it truly reaching for? Well, it's going to be the portion of the gap that doesn't have any wicks through it. right? If there is one, because that's imbalanced to the sell side. So what did they do when they came down into it? Targeted it and then came off the low. Okay, we do have this wick in here. It's going to be significant. If we can get this wick to hold and price just starts to displace through some of our invalidation areas like this, and the wick in here, if it just blasts through it, then obviously we have to adjust potentially. Okay. Yeah, the gap risk until the war's over, because it has to do with oil and how impactful this stuff is on everyone's economy across the world. Because of the gap risk, you got to just expect that it's going to be crazy. There's no holding trades over the weekend. You know, if you're trading, live funds, which I don't encourage you to do. You have to make that decision on your own. I'm not a financial advisor, right? So yeah. So again, we're going to watch this, see how it operates. I'm under the impression, given that we have this breaker in here, given the fact that this was a market maker sell model, given the fact that that all leads to this low to that high being a balanced price range, unless it was to turn, right? Because that's the case, we're going to continue to assume that price is going to go lower for the indices or the foreign currencies. Most likely the indices too, but we'll get to that. Okay. So yeah, that's basically everything I'm looking for on the currencies. Do you guys have any questions? Because that'll about wrap it up for the indices or the foreign currencies. And yeah, Mike, we have to be cautious. That's for sure. Interesting as I'm listening. Noticed most products complete. Market maker buy, market maker. So yeah, it's universal market maker models. We're always in some kind of market maker model. That goes for every asset, even crypto. So, and people can deny it all they want. They could say that's not true. But you spend a little bit of time here, and you could even figure that out very obviously just by spending time here. Let alone in your own studies. And some people, it takes years to realize that that's the case. Because they don't know what they're looking for. They've never been pointed to the fingerprints that are in the market from the higher time frame, and then how to do it on the lower time frame as well, which is something we talk about a lot in my private group. Because the market maker models, out of every single tactic, if I could pick one, well, let's just say pick two, right? If I could pick two things to always anchor my trading to, which this is actually a fact, by the way, for my own trading. But if I could pick two things, obviously there's more, which I've given a list about the most important pillars for this year, just in general. But if I could pick two, it's Power 3, because it's a framework and how each candle forms on every time frame. No matter what candle you're looking at, whatever time frame you're looking at, there's Power 3. And then market maker models, because they have the same fractal nature. They are both a logic and can be basically used as an entry tactic. You could use the phases and one PD array in the second stage distribution on the lower time frame for a market maker model on a 30-second chart, right? You could just go to the second stage distribution wherever you can identify it. And then if your narrative's correct, you could just execute based on like an order block or a fair value gap within that market maker model, right? And honestly, I think that's a pretty easy perspective, right? I think you guys would mostly agree. It's very easy to get lost in many, many concepts because there's just so many, and we have a vast amount of knowledge here in this community, and me personally. So I go very deep into things because I just understand at a deep level. I've done a lot of study, well over 20,000 hours, let alone 10,000. If like 100,000 screenshots probably. If I go look at my 10 terabyte hard drive, I mean, the amount of study is just nauseating when I look back on it. But it was worth it, and it'll be the same thing for you. It'll be worth it for you too. But, That also helps prove to yourself that you're taking this serious. And once you achieve success or consistency, it proves to you that you also deserve it because you did a lot of work on it. Some of us have a deep feeling for some reason that we don't deserve to be successful or something. Some people have that mentality. It's because of negative upbringings or whatever, doubtful family or whatever environment you were involved in. Some people have to deal with this self-sabotage, but the surest way to solve that problem, right, is by doing a ridiculous amount of study. Prove to yourself that you know what's happening, and then go on the chart and do it for 3 to 5 years. And it's undeniable that you deserve it when you do that stuff. But if you half-ass it, right, like, oh, I'll study here for 20 minutes or 5 minutes, and or you put everything off, I'll do it later, and then you never get to it, and then you just go in and just throw trades in every day, and then wonder why it doesn't work. That doesn't make you feel like you deserve it, and it definitely shows up in your trading. You can't lie to the market. We could lie to ourselves. We could lie to our family members. We could lie to our friends. But in the market, if you try to half-ass this, you're going to be very quickly exposed as not prepared. It's very easy because it's you versus you, unless you're going to try to lie to yourself, which, you're not going to get very far with that because, the results are just not going to be worthwhile. When people could just do it the right way, submit to the fact that this is hard. I make it look easy. I try my best to make it a little bit easier. I try to get your guys' attention on the things that are most salient, the things that have got me to the clarity that I have, and get many of my students, to clarity. Something that just happened, by the way. I don't want to finish this call without shouting out this student who started with me on YouTube, right? But shout out Jace, okay? Read what he said. He said, when I first started learning how to trade in August 2025, think about it, 2025, he felt like progress was shaky and he never had a true mentor. He understood things, but nothing truly began to click until he joined my private group. And of course, he started here on the YouTube channel, right? In the last 2 months, he's been here for 2 months, going live with me every single day. And he said that it's really accelerated his progress, and he feels, it's only up from here, right? And it's not only me. Notice how he also said, everyone here providing knowledge. We have cultivated a private group of absolute savages. There's only 40 of us in this group, and it's on purpose. I've removed many, many people who are not serious because it's not about money for me. It's about getting the traders that want to learn in a room together, in a community together, and then we go with each other, right? We raise each other up. And then you guys just watch, me call the market as I show you guys and claim that I do. You guys see it here on YouTube, but I'm live every single day in my private group. So if this helps you, it's worth consideration. And people say, well, if you're making all this money, why are you charging? I don't want to be around a bunch of dumbasses all the time. And if you give free stuff and you offer your time on a one-on-one basis, which I do, you're going to be not appreciated. And I've worked way too hard to make this happen for myself. And at this point, I've also worked very hard to build up my students as well. And out of respect for them, because it was their idea to make a paywall, I've followed what they said would make the community better. And honestly, it's made it better. And, a lot of times this is the result for those that truly apply themselves. So again, shout out Jace and everybody in this, private group that's given me their trust, because it's just nonstop. It's nonstop. Trades being taken, trades being secured, winning weeks, passing funded accounts, constant progress, massive adjustments. So this is one of my superstars in the private group, Harley. He's still the youngest trader I've ever helped, and he's just an absolute monster. Like, dude, look at how perfect that is. And it's one of many. $600 in a AMP account or Tradeovate, right? Funded accounts, payouts, $1,000 withdrawal. I think Mike took like $2,500 like a month or two ago as well. I mean, it's constant. There's always a new success story or a reinforced, continued success story. And the entries are impeccable, impeccable, right when price was going to leave. And I mean, it's over and over, So again, if there's any of you guys that do like what we do here, and you do think that getting around a community that, really takes things serious is something that you feel could benefit you, it's highly encouraged. We don't have the biggest following. I'm not the most entertaining mentor, but I can assure you the charts speak louder than most of these people's, BS that they do on social media, let alone the testimonials, which I have hundreds of testimonials if you go on YouTube or if you go on my Instagram or just simply in the Rising Funded Traders section, both in my private group and in the free group even. I mean, it's so totally obvious. It may be boring. Some people may think the way that we do things here is boring. Boring makes money, okay? Excitement every 5 seconds, it's emotionally charged. So most of them are not doing anything. They look good. They play the part well. Some of them are making money. But for the most part, the ones that are quiet, the boring ones, the ones most of the time that don't even say anything at all or even have social media, they're the ones that are quietly out here creating legacy wealth, and really, if they're mentors and they have that persona, creating monsters and self-sufficient animals that are ready to change their family tree. Of course, there's no guarantee. It's really dependent on how you apply yourself. But at the same time, seeing the transformation is why I'm here on YouTube. It's why I have a private group, because I like working closely with people and watching their growth. It just reminds me of when I first started, and it helps me save someone else, and multiple people from any of these issues that I encountered early on that made it take longer, that damaged my mindset, that was just absolutely brutal, right? It helps me save people from that, because this industry is unlike anything else. There's nothing better than this, I assure you. But there's a sacrifice that's required. You have to put in the work to make this work. You're buying your freedom. You think that comes free? You think that the market makers that push this, the algorithm that's been coded, you think it's designed for it to be easy so anybody can be successful and rich and go live, the jet set life with these, people that created it? You think that's what it was made for? It wasn't. It's a carnivore. It wants you to just go off the rails so it can eat you alive. It's just the way it is. That's what you're involved in. So that's why it's so important to get around people that know what's going on, look at information that knows what's going on. And this isn't the only way to trade, right? There's people making money in all different types of things, But in my opinion, I've tried many, many things, from MACD crossovers to Ikimochu, whatever the hell it's called, all kinds of different things that I tried at first. I lost all my money, and this is the only logic that gives me the why. I have to know why. Why should I trust this? Why should I see price go lower? Is it just because it's random and it just goes lower and higher because buyers and sellers are winning or losing? That's not it. It's all coded and uses liquidity and inefficiency, just as ICT has mentioned. Some people say, oh, well, that's not true. Right? I posted something like that on my Instagram, and I had some people commenting, oh, that's not true. Okay. Why are we so accurate every single week then, if that's where I'm putting my mind at? And every single time it's either liquidity being targeted or an imbalance being targeted, because internal to external, external to internal range is how price operates. Or it's reaching for, one of the other PD arrays in the PD array matrix, whatever's available in price. But most of the time it's liquidity and inefficiencies. If that's not true and it's overly simplistic, and people like what is true then? The answer to that question, most of the times, people give this overly complex situation and they can't even make that work. So it's like, this is proven to be effective. Not only from me, but hundreds of thousands of ICT students, from the charter group to some just on YouTube who are putting in the work. And communities like this help accelerate things, right? But it's undeniable. So it's not even up for debate. Does it work for you or not? If it doesn't, there's other ways to do things. But if it does, I got to say, this community is powerful. Not just me. It's not just me anymore. It's the students that I've taught. I mean, the value they provide in themselves, they're becoming monsters too. So it's definitely some stuff to really think about. But again, you got to put in the work. You have to put in the work. This doesn't come easy. Thinking that it's going to come easy for you, I mean, you're putting yourself at such a disadvantage, because nobody, if anyone could have had it come easy, it was ICT. If anyone could say like, oh yeah, it came easy and this and that, it was him. I mean, just look what he has shown. Look what his students have shown. Look what we show as a result or a product of, me spending, almost 7 years learning his concepts, both in, private mentorship and in my own studies. And then of course I've had help along the way with some that have more experience, like over 10 years with both my other mentors who are from the charter group. One of my mentors was with ICT when he was in Baby Pips in 2011, which was shocking when I met him and learned that. But that's the thing. Everything that I have taken over the years, I dump onto you guys. All the money that I've spent, all the blood, sweat, and tears that I've put in, all the things that took me so long to discover, and I wouldn't have discovered unless someone pointed it to me. You're getting the benefit of that as well. So you have an advantage, but that doesn't mean you're not going to have to work hard. 45 minutes a day. Every single day you have something to back test, right? 45 minutes a day, go from the weekly to the 1 minute chart. I give you guys a literal outline of how to map out the week, So you have something to do for the week. You have a process that has proven over 1.5 years publicly, and over 3.5 going on 4 years privately with my private group, that it just works. It makes sense. This is just what happens, right? And again, it's not even up for debate anymore. So, if you guys ever have any questions about what to study or how to back test or any of that, I'm more than happy to help you guys with that as well. I do that heavily in my private group for anyone that asks. So yeah, just let me know. But again, that's pretty much all I was going to say earlier about the currencies here. So, let me see. Slim said, hell no. And everybody, yeah, exactly. Then everyone would be millionaires. And the powers that be, they're not very, they're not people with high integrity. Some of them, most of them, some of them are, but most, especially like the, families that are at the top, they don't want people to be successful. Do you think they want everyday normal people on private jets? You think they want everyday normal people living in their neighborhoods? A lot of these rich, super wealthy elites look down on people like you and me. I heard one time there was a leaked. Well, someone went to a private meeting, and there was a bunch of elites talking about whatever the hell they were talking about, but they referred to us as eaters, not as human beings, as worthless eaters. I mean, that's shocking. And some of these people who have this mindset our leaders in countries. I mean, it just tells you the reality, and again, it's not all of them. There's a lot of good people that are wealthy and whatnot, but there's a lot that aren't. And there's also a lot that are in power in all across the world who look down on normal, everyday people, claim that they don't, but they look down on everyday people. There's a good example of that in the U.S., right? There's one political party that has proven time and time again that's how they feel too. They just want money and power, and they don't care how they get to it. They'll push child mutilation. They'll go that far to continue to manipulate, hold power, and make money in a very evil way because they're associated with, pharmaceutical industry or whatever. So just know, because that's the reality, you're trying to fight against potentially those people that created this. I'm sure that a lot of them, hopefully not, but, Wall Street has a very particular characteristic, stigma, right? And it's not necessarily sunshine and rainbows, right? So that's who we're battling. So again, you got to take this serious because they take it deathly serious. And the ones that are the most prepared, the ones that treat this like a business, the ones that do the right things, stay disciplined and manage risk and listen to people that are worth listening to, those are the people long term that end up having a lot better results, and have the opportunity to live a life that you can't even imagine, So remember that when you are hesitant to backtest, you're doing this for a reason. You started trading for a reason. Prove to yourself that that was a worthy task. Prove to yourself that, this can be done. I proved to you guys that it can be done. Many students in my private group, to those that are in that group, prove that it can be done. Students like Jace, it just proves that all it takes is to be around the right information. All it takes is to be around a sincere person that is truly there to help you, who knows what's going on, to point you in the right direction. Sometimes that's all it takes. And then boom, right? There's a breakthrough that takes place and the clarity floods in. And all of a sudden you feel like you can do this. If you ever doubted it before, you won't doubt it anymore. Right? All this stuff matters. You know what I mean? And for some, they need that extra help. And that's why I offer it. And for some, the YouTube channel is all they really need. That's why I offer both, So yeah, think about some of these things. And the next time you think that, it's boring to backtest, it's boring, I don't want to do this, I don't want to do that, I'm too tired, I'm too this, too that, excuses. Next time you flood yourself with excuses to not backtest, to not do what you know you should be doing to be successful, just know that if failure ever was to manifest, it's going to be because of those decisions that you chose to make or not make. That's what I told myself when I first started, constantly. I said, nobody's going to outwork me. I was literally saying it to myself every day. I'd get up like an insane person, look in the mirror and then say that in the mirror 20 times a day. Like, no one will outwork me. I'm going to do this. I can do this. I may not be there yet. It may be seeming impossible now, but it's been shown that it's possible. So if it's possible for some other person, some people on the internet, why not me? And it may be harder for some people, but again, that just means you got to work harder. Not everyone starts in the same playing field, at the same level, both mentally and financially. But the ones that start a little bit behind, maybe a little later, later in life, maybe, you start and you're dead broke, versus someone that already starts with money. It just means that you're going to have to take a little bit more time. It means you're going to have to work just a little bit harder, But honestly, that shouldn't be an excuse. It's easy to turn that type of situation into I'm a victim, but there's really no reason for it. You just got to work hard. It opens up the opportunity to anyone and everyone who's willing to do the right things. And again, all you need is the right environment. You need the right mindset. You need to manage risk. You have to learn a tactic or a system that makes sense, that works. And again, ICT Concepts, look at his channel now. When he went public in 2022, right? Or I think it was 2022, 2021, where he opened up how many people follow him. It was like 103,000. And then you fast forward to now, this was at least in 2022 when he was about to drop the 2022 model. He opened it up, right? He opened up the visual because for the longest time he didn't allow anyone to see his like count, right? Or his likes, comments, or just how many subscribers, you know. But then he opened it up like 3 to 4 years ago to show the world how many people really follow him. And then you fast forward to now, he has over 2 million. He's the most subscribed to trading educator out of everyone, the most watched, literally number one, like in terms of watch time. That tells you something, you know. If like that alone doesn't convince you that this works, what we do every single week, every day in my private group, once a week in our live trading calls here on YouTube, that shows proof too. I'm not ICT. I'm just a normal person, just like you. But I've put a lot of work and it's manifested just as it can for you. So there should be no doubt in your mind that this is possible. The question is, are you going to do what's required? Are you willing to make the sacrifices or make more sacrifices than excuses? Because no excuse is going to be valid to you if you're on your deathbed thinking, man, what could have happened? What could I have done? No excuses are going to be worthy to you when you look back and regret the hell out of the fact that you quit. Even if it takes you 10 years, what's the point in quitting? If you're losing a bunch of money and it's being a hardship to you, stop trading live. Get comfortable with what you're doing. Prove for at least a year that you can be profitable treating a demo account like a real live account. Start with a reasonable amount, $10,000, right? $10,000 account, right? Or whatever your plan is for funded accounts, right? Start with that and then set the rules and follow them. Practice. You got to practice how you're going to play. You can't just wing it on demo and then go into a very strict environment like a prop firm and then think you're going to just be good because you swung for the fences and quadrupled the account because you were just swinging for the fences. You're going to practice how you play. So that's a way to make a demo account very powerful and super useful, and actually an asset rather than just clicking buttons like it's a video game, just trying to get a feel good and then making excuses every time you do it wrong. Like, oh, I just wouldn't have taken that anyway. That's retarded. like that. That's why demos are useless for most people. That's how they look at it. But again, with that perspective shift and way of looking at things, like that adjustment, can't you see why quitting is just not worth it? It wouldn't be worth it. If you lose after you jumped into live funds or into prop firms and you're just struggling, move over, put it to the side a bit. Don't quit, because I guarantee you know what's going on. You know the opportunity. That's why you're here. That's why you started trading. And if you've been trading for a while and you're still struggling, that's why you're still here. You know what the opportunity provides you. So even if it takes you 10 years, if you apply yourself, it's not going to take that long, right? Because, just what we do here is pretty spectacular. But even if it was to take you 10 years and you can make 5, 10, maybe double it, 10,000, maybe double your income, at your job, or even supplement it. Maybe make an extra $2,000 to $3,000 a month on top of your job. Would it really not be worth like spending time and not quitting? All right, wouldn't it be worth it? right? It's just not worth quitting. This is the type of conversations I've had to have with myself too, when it was really, really hard for me. I mean, it was a lot of times where I was sitting here like a psycho, just talking just like this out loud to myself. Because it's hard. It really is. But it's possible. And you just got to do the right things. Don't put yourself in these bad circumstances. And hopefully this channel helps you see the right things to do. And hopefully you guys take value from the perspective and whatnot. Some people don't like these conversations, but you know what? Go somewhere else. Okay? Because I'm not here for you. So, yeah. So again, hopefully you guys got value from some of the things I just said, but if we get back to the charts, I don't want to keep you guys here for too long. That stuff it's so important, to talk about these types of things. So hopefully you guys got value from that. Tony said preparation is mandatory. Yeah, absolutely. Yo, what's up, Fancy? Appreciate you hopping on, brother, as always. But yeah, so hopefully all of you guys understood what our opinion was on the currencies. Now we'll jump to the indices and discover what could potentially go down on these assets. Okay. Okay, so let's go to the monthly chart. Actually, let's start at the quarterly. Okay, so I've been talking about this for like the last couple of weeks. We have this fair value gap in here for this quarterly perspective. It looks very, very likely that they're going to potentially want to target that. Okay, because look, we got external taken. What's the next mode of operations generally? Internal. Is the internal guaranteed to hit the fair value gap? No. Is it likely to? Yeah, most of the time. You also got this previous quarterly low. So we got a swing low liquidity from previous quarter. That's got a lot of stops down there. And that's also a part of the quarterly fair value gap. When you think of the yearly power 3, you think about it, last year in January, what did it do? Opened up, declined, so that was manipulation. We got to the second quarter, it manipulated one more time, dug a little deep into April, set the low, and then of course, price rapidly turned around. All of the tariff conversations were just beginning at that time. That was what pushed this. But nonetheless, we got accumulation, manipulation, distribution, because it was a bullish year. And then we got distribution again going through the third quarter. And then we got one more punch up, creating the high of the year. And then we came off of that, closing the yearly candle. And as you can see, if we go to the yearly perspective, that's our whole yearly candle. So first, one, sometimes, going into the second quarter, right? The first and second quarter creates the lower portion of the wick for the yearly range. And then the middle portion, right? Most of the second quarter going into the third quarter creates you the expansion. Then we get to the Christmas rally, it attempts one more time, and then it comes off creating the wick for the yearly perspective, which we used this wick in January. If you guys remember, if you guys were here in January, and definitely in my private group, we talked about it a lot, but you guys should remember we used the quadrants of this wick. And then we kind of framed some of the moments for targeting, and then of course rejection as well. And of course thinking about the fair value gap down here, right? Because all of the price action in this candle, this current quarter, was part of January, right? And so now we're very close to targeting that gap in there. If the NASDAQ tags that, maybe the next quarter tags it, or CPI maybe drags us down into that, possibly. It's really, really far away. Yeah, it's too far for CPI. 660 to... No, it's actually not too far. We've been pumping 800-point ranges on a regular basis, which is insane. So I guess, it is reasonable for that. It may look to end the quarter like that. It may look to continue to drop. What is that supported by? Bearish bonds, bullish yields, bullish DXY, bearish foreign currencies, and then, of course, bearish indices. So all of that aligns with the assumption that this should target this gap in here. So this is how you take this analysis that we do and then use it to verify and filter out what PD arrays should or shouldn't be targeted. Given the circumstances, I'm not looking at the highs up here, or I'm not looking at any of this, unless it was to start running up towards it. Then we would have to go and look at what's potentially changed, if anything's changed at all. But the analysis that we've done all the way up to this point makes it very obvious that this is a prime candidate for price to get targeted, or for price to target, right? And then if this tags this and then the S&P doesn't and it keeps going higher, we may see things adjust and then get a response from that. And then that'll also leave us with SMT at the delivery at this quarterly fair value gap. This is a similar thing that we do on every time frame when it comes to SMT coupled with fair value gaps or external to internal range expansion. And then we got an internal range expansion too, once it fulfills a logical level. We do want to watch this, obviously, to start the week. So, but yeah, this is our bird's eye view perspective. We have the fair value gap in here. We have a wick in here too for the S&P. We do have this wick in here. If you take the high of the wick to the low of the wick, map that out, you get a bunch of quadrants, just like we do on the lower time frame. This is the higher time frame though, so they'll be even more dynamic, even more sensitive than they would be if you're just observing something on the 1 minute or the 5 minute chart. Okay. Okay, let me actually. I want to make a quarterly fib. So yeah, let me see. Okay. Okay. So yeah, we got the quadrants in there. So then we'll use that as we drop down a little bit and we'll kind of get an observation of what we see in price, okay? So yeah, taking that perspective, I go to the monthly chart. What do we see? We see a previous month's low. Previous month's low is right there. Remember, the current and previous candle and anything in close proximity to where price is currently at, those are your important liquidity pools. Where the hell is it? Okay, so that's a monthly low. Why is it dashed? Okay. So yeah, that's going to be my main objective. If this continues to drop, it just looks like external, now internal. And again, on that large view, we have that quarterly fair value gap. We have an extension down here too. There's a breaker in here close to the high. We just map that out. That is right here. This high to that low. Take this high to that low, measure it out. And you can get the fib projection that I've got highlighted here. See? Right right there. So that's going to be part of what we're potentially going to aim at as we continue to drop. Nothing in this chart is screaming to us that price is going to go higher. If you look, we got new week opening gaps in here too. Let me clean this up a little bit. We have lots of new week opening gaps. This indicator is an indicator special for my private group, just a perk of being in that group. We're coming out with more indicators that are going to be part of lifetime students partnership, right? So if you want those, I'm also coding I'm having one of my students, who's absolutely amazing, shout out Mark. He's coding basically things around the models that we use for entry. So then we can have an indicator that populates on the chart when our entry tactics show up. So I can help guide students visually so they can see outside of what I do on a regular basis. They can start to see it on their chart. And it's like a good study tool, but it's also like a signal, like a signal tool, I guess. It's going to give us signals that we can then vet and then kind of determine whether it's worth taking or if not, right? Because, sometimes you'll miss things, right? And if we have something algorithmically prepared to find things when certain criteria apply, it removes the discretionary aspect and it'll be kind of beneficial, right? So that's something that's in the works as well. But we have new week opening gap here, new week opening gap here, here. If we drag it over here, we got a big one sitting right here as well. This is a significant one because price is literally in that area. So let me actually make this bigger or darker. Darker and bigger. Okay. So yeah, that new week opening gap, all right? Got this little one in there. I think I can actually remove that one. Make it smaller. Okay. So yeah, we'll see how it wants to treat this. We do have a open price here for March. We do got this wick in here. We're going to have to start really giving it up, right? It's going to have to give that up. Now, if we see this respect and then price gets beyond this low to that high, the breaker, right? Low, high, lower, low. If we see price start to break down below this or hold this, great. We'll keep going lower. If price gets beyond this new week opening gap, that's going to be a problem, right? If it gets above the new week opening gap, it's going to be a problem because then we may look to target some of this because that is relatively equal. Of course, that triggers in when this wick here, which should be a balanced price range, up to this point, it's being respected as such. Unless this is violated, unless we break outside of this new week opening gap, and preferably if we break this high, that'll turn us off of any type of bearishness. And then, of course, we'd like to see DXY and the other assets confirm and support that idea. But for the most part, I want to see how this wick and this wick hold up. This right here, if you take the 50% of this wick and the 50% of this wick, this is a PD array that ICT calls an implied fair value gap. Okay, maybe you've heard it before, maybe you haven't, but it's where you take the 50% of wicks that overlap a displacement, right? They overlap one another as well with a displacement in the middle. And so you take that, you get the midpoint. And then you take the other gap, get a midpoint there as well. And then you're able to then get what ICT calls an implied fair value gap. Just another variation of the fair value gap. Okay. So it's definitely something I'm going to keep tabs on. And honestly, I'd prefer to just see this hold up to the 50%. I really like to see sensitivity from the lower portion of this new week opening gap. As long as that happens, we have really no reason to believe that price is not going to keep going lower, especially with all the other assets and what they have been showing us. But there's just no reason to push for something else. There's no reason for it. You know what I mean? So yeah. With that being said, this is going to be our target. And we're going to try to see if we can get this to keep going lower. Now, we have had very exaggerated other indices deliver, right? So this indice, the S&P, it's kind of slow like this, but we've had the Dow completely fall out of bed. We can't disregard the fact that there is an SMT in here. Okay, so we do got to observe the response here. And if this SMT results in this being a failure swing and we get above the new week opening gap, that's enough for me to believe that we may look to target this. But again, we're in a range. We've been swung all around, right? Buy side, sell side, buy side, sell side. You know, we've been able to find moves, obviously, but they're very short-lived. You have to be in and out. It's a scalper's environment. Large ranges, though, large consolidation range in itself, because there's just so much going on, and it directly impacts the economy, right? Oil, that impacts every walk of life, every situation, every product almost. The manufacturing of things, because to run the machines, many times they have to have, gas, to transport things. It requires gas. So that's passed on to the consumer. And then price goes up, right? With whatever thing you're trying to buy, because the transportation cost elevates, the manufacturing cost elevates because of oil. And, that's why, what's happening in the Middle East, the person that's, Iran, they're over here trying to basically bomb not only their neighbors that had nothing to do with anything, but they're trying to hit their oil because they're getting so beat down by the U.S. They're now flailing out, trying to attack everybody. More importantly, though, they're trying to target the oil infrastructure of countries because theirs is being disrupted too. I think all their oil refineries got blown up yesterday. So I'm going to be very, very curious to see what gas prices look like today. Hopefully they mitigate this because it's not going to be good. In California, I would not be surprised if $10 gas prices take place per gallon. And honestly, if that's the case, that'll probably be enough for me to move the hell out of here because I can't stand it. I cannot fucking stand these people. You can imagine that all the hardship that's going to come as a result of these stupid people and what they've chosen to do with oil and gas. It's a choice. We have the economic chaos going on with that war. But then again, it's like they already taxed the hell out of people. They won't even calm it down, even in a chaotic environment where there's things happening outside of their control. Even in that instance, they don't care. They'll still hit you with a $2 extra tax on whatever the gas price is. So even when it's like the lowest of the low, it's still double price over here. And they still got, the regulations make it so houses are ridiculously unaffordable. Even if you have money, why are you going to spend $1 million for an apartment? Like that doesn't make any sense, right? It doesn't make any sense, but that's what they want people to do. So, but yeah, there's a lot of things that are going to be impacted by the oil and gas. And because that has such a heavy impact, the companies in the S&P and the NASDAQ, they're going to feel it too, because those companies have manufacturing costs. Those companies have transportation costs for their products, electricity, the electricity cost, because it still runs on oil and gas, which is what it should be running off of. We don't have enough clean energy to, make things work. But because, most of the, electricity infrastructure runs off of coal and oil and gas for the most part, that's going to be elevated too. And if that elevates, that's another thing that gets passed on to consumers. So that's going to damage people's ability to buy things because it's going to be so many expensive things taking place all at once because of what's being done in the Middle East as a result of, a righteous mission to eradicate a certain perspective, so yeah. With this being considered, how is this going to affect the market? Well, we may see price continue to decline, continue to support this because there's so much negative stuff going on. I wouldn't be surprised, honestly, if they gap below, get close to the low. If we open up, because it's been brutal. You see some of the videos from yesterday? Man. I mean, Iran is literally on fire on all corners. There's a person sitting in Tehran doing a video all the way around, looking at a 360 view. There's bombs blowing up over there, refineries on fire over there. Like all in one video, you saw like 10 different piles of smoke and big explosions. So it is getting crazy. So and of course they've ramped up their attacks on oil, the oil and gas for the global economy. That's why they're attacking the UAE and all these other countries that had nothing to do with it, but now they're going to get involved. So they're just Iran's asking to be obliterated, at least the regime, because they won't give up nukes. So many people have interests in this. It's not just the U.S. There's many, many, many things. So we hope that the Iranian people don't get hurt. But just remember, all this stuff that's happening, you may not be into politics. You may not want to, focus on this and focus on that. But if price just falls out of bed and you don't understand why, or don't at least have a understanding of what's potentially causing it, yes, it's controlled. Yes, there's an algorithm, but world events still impact what's happening, especially when it has to do with commodities. I wouldn't say most expensive ever. I think it's been higher before. If we pull up this chart, it's definitely been higher before. Way higher before. It's been $1.30 per barrel. We're definitely on a rampage to try to get up there. It's already $100 a barrel. This is brutal. Brutal. And if we go to gas prices too, this is per gallon, if I'm not mistaken. $2.70. I think that's per gallon. If I'm wrong, anyone that watches the video, correct me. Before I get into that, again, this is pretty much my perspective on the indices. So hopefully you guys got a grasp on that. And yeah, we'll see what happens, right? The implied fair value gap. We'll see if we open up, rally up, create a bearish power 3. Okay, and we got this low, this low, this low, and then of course our quarterly fair value gap, which is going to be our main target. Okay. So yeah, that just about does it for the indices. So hopefully everything makes sense. And again, we'll move over here to the oil and gas real quick. And gold and silver as well. Gold and silver should maybe hold this and go lower if it's going to keep dropping. Same thing with this. We got a bearish breaker on silver, so it may look to try to wipe out more sell side. Possibly. More wars and all this stuff, it's positive for this. So if it inverts the fair value gap here, we could look at that as a potentially reasonable idea to look to see further buy-side liquidity. If it breaks this low in here, that's a double change in state of delivery. So that'll really put into position the likelihood of them declining into this. Okay, so that's my quick down and dirty opinion on gold and silver. If we come over here to oil, I've already taken all that out. So, I mean, looks pretty reasonable that they'll target this. If we go to the monthly perspective, quarterly perspective, isn't it ironic that this bounced from a bullish order block? Isn't that like crazy? So what, did they anticipate that a war was coming? So they just like accumulated in the 3-month bullish order block and then just exploded? Like, was that already, did they already know? Maybe they already knew. They probably already knew. I mean, it wasn't hard to know that, you know, things were going to start to pop off in Iran. You know, it wasn't very, it was very telegraphed. The most telegraphed move in history. And they still have obliterated them at this point. But yeah, so if we go 6 month, let's see, we got an order block. We do have a 6 month inversion fair value gap right here. Right there. Do have that 6 month fair value gap inversion. So that's going to be significant for oil. I think that that'll be able to push price. If we take that and go to the weekly chart, you know, you could clearly see we blew out trendline liquidity. And now if we take this, right, this should end up being sell side, buy side. This should be able to hold up in price because this is now a balanced price range, sell side, buy side. We've given up the buy side delivery. So that is explosive. So if we open up, I wouldn't be surprised if they leave this available. And then maybe they drop down a little bit, tag this. Definitely don't, they're not going to go to the 50%. I don't think they'll do that. There's too much stuff happening that is very volatile in a bullish sense for the oil and gas. It's basically, you know, that's the only weapon that Iran has that may work. But then again, it might not, because Trump he's taken over Venezuela. Well, not taken over, but changed it, right? Made it more favorable, not, you know, so communist, right? Or socialist. I think they're more socialist. They're talking about Cuba. You know, we're taking out a lot of the cartels and all that. So I feel like the Venezuela thing is going to potentially be able to help this. We've ramped up our production as well, so maybe we'll be able to supply. We got Saudi Arabia, the UAE. We got basically all the Middle East countries that, you know, deal with oil and gas wealth. They're all on our side, and they're willing to help us. You know, they're willing to make an adjustment to be able to kind of pick up the slack that's being screwed over by what Iran's doing. So, I mean, we'll see, right? That could be what mitigates this problem. That's what I've been hearing. So I'll keep you guys updated on that as well. I do encourage you to, you know, really look into it. If you guys want resources to watch these types of things, that's not like super one side or the other when it comes to politics. It's just like, what are the facts? I'm more than happy to share those resources with you because it is a part of our analysis. It's situational awareness. You know, certain things that happen economically and globally impact what happens in the market, and it'll directly be tied to a decision that you make. So, especially if you're trading commodities, because there's a true supply and demand factor, you know, so yeah. But we'll see what happens with this here. I'll make a prediction on this, and then we can come back next week and see if we were correct. I did talk about this before it happened too. So with the war, you know, watch and see if this holds. I didn't notice the quarterly bullish order block, but it makes even more sense. Monthly fair value gap, quarterly bullish order block, explosion because there's a bunch of bombs being dropped in an oil capital of the world, right? I think some crazy amount, like 30% of the oil and gas comes from the Strait of Hormuz right next to Iran. And that's why it's had such a heavy impact like this. Any of the oil-rich countries, though, I'm sure they definitely like to see $90 a barrel. Countries like Russia, their oil sales now make $30 more per barrel, right? So almost double what it was making down here. Well, it was at $55 a barrel. Now it's at 90. That's like literally almost double the profits that they're making, or than they were making, right? I mean, that's crazy to think about. Hopefully those interests don't take over and it stays that way, because they refuse to help. Saudi Arabia, though, and UAE, they definitely said that they're going to try to ease some of the issue. So we'll see if that happens. If that happens, we'll see this thing have a sharp decline, or maybe not so much a sharp decline. It may just slowly drag down. Hopefully this happens for the sake of everything that we purchase, because everything's going to go up. It's either inflation through printing too much money, or oil and gas price issues, or energy, because you need energy to manufacture and create things and transport things and do agriculture, right? Tractors and whatnot. And if that cost is too high, they put it to the consumer by raising prices, because they're going to get their money. They want to keep it low, but if they can't and have good profit margins, they're going to make the profit margins more important. So yeah, for the sake of everybody, hopefully this stops, or hopefully there's countries that, come together like it seems they are, because the U.S. is defending all the Middle Eastern countries right now. So for the sake of the U.S. and all the consumers of all these countries, for the sake of them, hopefully they come together, because Iran has definitely shown, or they've taken the mask off, shown that they were never friends to any of these people in general. And they apologized the other day too for bombing Saudi Arabia. But then like 5 minutes later, there's bombs dropping in Saudi Arabia again and again and again, all the way up till early this morning over here. Bro, since Joe Biden, gas prices in LA are still above $6 a gallon. They were at $11 a gallon when all the chaos that he was unfolding on us about like getting rid of gas and whatnot. And then when he was printing so much money and inflation struck, and then the whole war with Russia, the way that they conducted themselves in those conversations literally went to $11.80. That was the highest I saw where I lived, which is Central California. We're still at $5-6 a gallon. It's still hovering. It literally jumped 40 cents overnight, which is insane to see. Because when you look at the thing, right, the gas thing and the ones that are digital, it follows real-time price, right? Real-time price fluctuations. So when you look over and you see it's like scrolling up like 5, 10 at a time, I mean, bro, really? And California's messed up because they have regulations and taxes to try to make it so you're priced out of using oil and gas, so you get an electric car. It's $1.60 on top of the national average, always. So California is going to permanently, unless this changes, which I hope it does in November with a new governor, unless it changes, unless they retract this BS, we're having oil and gas companies leave our state. Like they shut down 2 refineries, or they're in the process of shutting down 2 refineries, and we're going to be solely dependent on imported oil and gas. Bro, like when we pump oil and gas here, it shows how like much of a lunatic these people are. Their ideology is so important to them that they don't care if the people struggle and suffer tremendously and go broke in the pursuit of their stupid ideological agendas. I mean, it's pathetic. It really is. These people do not care. They might as well claim that they're socialists because that's what they want. They want all the energy, like electric energy, the clean stuff, anything that's for renewable energy, they want it subsidized by the taxpayer. They want you to pay for it, not them. They want you to pay for it by raising your taxes and then removing your other options by force or pricing you out of them, like with oil and gas. Now, this has been happening for years here in California. It's part of the reason I want to leave. I'm going to leave. I just got to figure out what I'm going to do with my child's mom because she's a psycho. So I don't want to, have a bad situation with that. It's already not the greatest. So that's why I'm not gone yet. Or I would be paying $17,000 in taxes, income tax. I mean, it's completely nauseating, honestly. It's ridiculous. Another reason why I want to get the hell out of here. I work too hard for my money. So yeah, that's how things are being affected out here with the oil and gas. So yeah, we'll see, right? We'll see what happens with this. We do have, equal highs? No. So we got highs up here. So yeah, we'll see what it wants to do here. We do got a gap in here that it might want to come down into. That looks kind of interesting. Yeah, we'll see what it wants to do. Damn, it's already 7. I gotta be out pretty soon. So yeah, with that being said, keep our eyes on this. I wouldn't be surprised if we drop down, try to target this a little bit, then go. We may not. It may continue to be parabolic because, that's just the way the commodities are. When they move, they freaking move. And this is being affected by supply and demand. The supply is being strangled because of the Strait of Hormuz being closed by force. The U.S. Navy has to go in there and clear that out because unless that happens, this is going to keep happening. It's going to stay stuck like this. So, and that was always a threat. If Iran didn't get what it wanted, if it wasn't allowed to make a nuclear weapon, they were threatening this for years while they were screaming death to America. So I think they're getting what they deserve. Not the Iranian people, not the Iranian people. They're amazing. Some of the most respectful people in this country, let alone their country. So yeah. Oh, the UK is 1,000 times worse than what the US is dealing with. I mean, there's a takeover, just like with our border crisis. There's a takeover there. There's rape gangs. They're being priced out of things too. Starmer's a communist. I'm locked into what's happening in the UK. I have three students, not including you, Mike, that live there. Tell me all about the craziness. It's sad because I always wanted to go to the UK. I thought about living there for 2 years. And then I started hearing all this stuff, and I'm like, yeah, I think I'd rather deal with the U.S. problems. And you guys need a new leader. And I think you guys will. Rupert Lowe, heard about him. The whole movement that Tommy Robinson's pushing, I think it's pretty amazing. He's just trying to figure out like Trump, right? They're trying to have their Trump movement. The freedom of speech. That's another thing. I've said so much stuff about the UK. I bet you the MI6 or whatever the hell they're called. I bet you they already got me on a list. Because they're putting people in jail just for Facebook posts. A bunch of random people. That maybe not even on social media as much. But you say something against them or against the Islamic takeover, and you're going to be having a knock at your door. More people have been arrested in the UK over free speech than in Russia in a full year. Last year, it was like 12,800 people. In Russia last year, it was 3,000 something. I mean, that tells you something. They may not go by the communist label yet, but they sure are having a lot of characteristics of communists. I'll definitely come visit, though. I got a plan to come and visit everywhere you guys are at. So I think that should be fun. And then again, at some point, those of you in my private group, I will be sharing details about the group trip that I'm going to take you guys on. I'm going to get some of my longest students that have been with me for over 2-3 years, and I'm going to treat you guys to a trip to maybe 3 or 4 locations. When that time comes, we'll talk about it, but that's something that's in the works. I've been talking about this for a couple years. I think we're gonna do it. So yeah, I'll let you guys know. Florida's definitely somewhere I got to go. Never been there. Lots of good things. So that's the type of leadership the country needs. That's the type of leadership the world needs. Honestly, do what's right for the people. Don't strangle them out because they put you there. The least you could do as a leader is put them first. The least you could do. But for most, it's the last thing that they do, unfortunately. But Florida's definitely a good place, so definitely. But yeah, I'm definitely coming to the UK, Mike, at some point. I'll let you know when I'm out there. I'm going to come and invade your your city, see what's going on. You could show me around. Yeah, UK is a beautiful place. So yeah, with that being said, I won't keep you guys much longer. Appreciate you guys for hopping on, spending time, give me your opinions and whatnot. Hopefully you guys got value from today. But yeah, watch these things. Let me know in the comments, if you did learn something that you maybe haven't learned before, or something that was the most impactful. If you feel inclined to do so, just leave it in the comments. I'm very curious to see. And yeah, don't forget to like the video, subscribe to the channel. Again, hopefully today was valuable to you. Spread the word with anyone that you think that can benefit from these types of calls, these very detailed calls that really cover all bases and really try to deliver the bias and narrative mastery that all of you guys, including myself, have been on a mission to attain, right? I feel I'm somewhat there already. Well, I don't have to learn really anything, so I guess you could say that I'm already there. But you guys will get there, right? You guys will absolutely get there, and hopefully you see that this process every week, both on Sundays and on the live calls, is pushing you closer, right? So yeah, let me know if you guys have any questions about anything. I'll answer it maybe through DMs and whatnot if I see it. And yeah, we'll be live again on Tuesday. We'll be live at 5 a.m. potentially, depending on how I feel. Or maybe I'll push it to 6. Kind of depends on how I feel on that day. Because there's no news, we could pick either one. Maybe I'll hop on at 5 so we can discuss some things. I can answer some questions. But if not, we'll be live again at 6 a.m. And those of you in my private group, you guys know the routine. We'll be live tomorrow for Monday's trading at 5 a.m., maybe 5:30. All right. So yeah, that being said, have a good weekend, guys. Appreciate the love and support, and I will see you beautiful people back here on Tuesday. And those of you in my private group, I'll see you guys bright and early tomorrow. Okay. So God bless, and I'll talk to you soon. Have a good rest of the day, you guys.